Hey traders, I'm gonna do a live video here, some live trading. Something that you guys can expect from me in the future. I might be launching a live room shortly. Haven't really made up my mind yet if I want to do this. And it's strictly gonna be a hedge trading, day trading room. Right now, I want you to watch the white chart is the spider and the blue chart is the Q, and I'm just getting set up here. What I'm going to do is I'm going to buy the spider, I'm going to sell the spider, and I'm going to buy the QQQ. Okay, and this is a live trade that I'm going to do right here in front of you guys. um, and this is something I'm considering doing very shortly in the future. Okay, so I'm just gonna wait here. I'm gonna pause the video, and then I'm gonna take the trade when I take the trade. And again, we're gonna sell the spider, we're gonna buy the QQQ. So I'm gonna pause the video right now, and I'll let you know when I do that live trading. Okay, so we're gonna place a trade here where we're gonna sell the spider at 268.24. Let's get that in there. And we're going to buy the QQQ at 165.07. Okay. Now I've actually just going to take the trade on paper for you guys right here. I've taken the trade in my live account, right? So we are short the spider and we are long the QQQ. Now the trick with this style of trading is really important that you that you take the appropriate amount. So make sure you switch your dollar amounts to the correct dollar amounts. In other words, don't do like 1,000 shares of the spider and 1,000 shares of the QQQ. You've got to take an equal dollar amount. So let's just say you did $10,000 worth of short the spider at 126 and $10,000 long the QQQ at 165.28. Okay, now I'm going to use, just for the sake of argument, I'm going to use $100,000 on each, just for the sake of showing you guys this, because it's just better to do it that way. Okay, so I'm going to pause the video. We'll come back to it. We have a report out in 15 minutes, but I don't want this video running like crazy. This is a service I'm considering launching as a real-time service for you guys, and just give me your feedback. I want to try it out, and we'll see if you guys enjoy it. Okay, so this is all real-time. Market's live right now. You know, this is not a replay. Let me just 1 second, just to show you guys live time. Toronto. There you have it. 9:45 a.m. live time Toronto. Okay. I'll refresh the page. There you go. Can't lie about that. Okay. Alright, just a little update here. You can see our spider's almost back to break even, but our QQQ is actually making money. I'm going to give this trade a bit more room here. And you can see there's our spider. We got in short. It's like I said, almost back at break even, but yet our QQQ is making money. Now here's an interesting situation. We have our spider making money and our QQQ making money both at the same time. And if you guys get good at this, this can happen quite a lot. Okay. I'm going to hold this till after 10 o'clock report, because I think we're going to get it here. QQQ's break even, spider's making money. Okay. I'm going to hold it till 10 o'clock. I'll come back and do a recap or do more on it. You can see our spider is making a lot of money. Our QQQ is not losing as much. We are definitely on the right side of this trade. Okay. I want to watch what happens when our spider gets down to this level right here, and we're going to consider taking the trade off at that point in time. We'll see. We got a few minutes to the report. Okay, you guys can see we're back in another position where both sides of the trade are making money. The QQQ long is in profit, and the spider short is in profit. We have about 4 more minutes to this report, but yeah. Now the spider is break even and the QQQ is in more profit. We'll see. Hang tight. Come back. So just to calculate here, assuming we were doing $100,000 of each of these, okay, the price of the spider right now, actually when we took the trade, we got to do that. The price of the spider was $268.24, right? 268.24, and the price of the QQQ when we took it was 165.08. 165.08. So we would have short 337 shares of the spider, and we would be long 606 shares of the QQQ. You can see here again, we're back to break even, and this is a winner. We have just a couple minutes to the report, so hang on. Here's another situation where both of them are in profit. The short is in profit and the long is in profit. Okay, so we had data come out right now. ISM non-manufacturing came in at 59.5. A slight beat. Whenever I look at these situations, I'm looking for any really big variance, and I don't really see any too big variance here. So I think for now we're just going to stay the course, and we're not going to make any adjustments to this trade. I like the trade for now. So no big variance in the data. You can see that our short position is still profitable, and our long position is still profitable. Nothing to do right now. That variance isn't that big. So hang tight. I'll come back. This is looking good. I'll come back and let you know when I take this trade off. It's a live trade happening in real time. Okay guys, it's a little after almost 10:30 here, about a half an hour after the report, and you can see now the trade is a little bit upside down. Our short side is losing and our long side is losing. Not by much. No reason to worry just yet or make any adjustments just yet. Everything is still according to plan. We'll stick with the trade and we'll come back when we close it. Sometimes these hedges can take all day to play out when you get them right, but I want to give you guys a really good solid idea of a better way for you to start day trading. Now I still day trade when I'm trading managed money, but I do it differently in that I still follow all the principles that I use and teach in my one-sided directional trading course, but I just always find a good hedge for it. It's just really that simple. So trade's about break even right now. Um, our short is making money and our long is just barely. So we're going to hold on to this. There's a lot of nonsense going right now on Twitter, on NAFTA. Oh my God. So apparently, apparently Trump, being the brilliant negotiator that he is, was only using the steel tariffs to renegotiate a better trade on NAFTA. He said that if he gets more of what he wants in the NAFTA arrangement, then he's willing to drop the steel tariffs. Lord have mercy. This is this has, this is so upsetting for me as a Canadian on so many levels. First level is that, first of all, NAFTA is a great deal for Americans. It's a great deal. I'm sure there's a few people in the United States that think it's a bad deal, but if you lived in Canada for any length of time, you would know how much we just get completely fecked over by NAFTA on so many levels. Everything is so much more expensive here in Canada than it is in the United States, from houses to cars to books to everything. And the main reason is because NAFTA is a huge benefit by far, for the most part, for Americans. Trump is using this and playing you Americans like a chump. There's no problem with NAFTA, guys. You guys are winning. You have been winning on it for decades. He's only using it the same way, I hate to say this, that Hitler used the Jews in the banking system so he could gain power. This is typical maniacal thinking from a narcissistic maniac that is basically just lying to you about things that are just not real. Okay, so that's the first problem that I have with it. I live in Canada. Come and live in Canada for a couple of weeks. You'll see our cost of living here is way higher than what you guys get in the United States. I would give my left testicle to live in the United States. You know, free healthcare and everything. Believe me, Canada sucks on so many levels compared to being American. It's not even funny. Even with all the crazy guns that you guys have down there, I would still give my left testicle. You wouldn't want it, but you can have it to be an American. All right? The advantages of the United States are so much greater than Canada. Okay? I'm sorry, Canadians. Anybody that says anything different, I've lived in the United States and I've lived in Canada, and believe me, yes, there are advantages to living in Canada, but the disadvantages are far outweighed by the advantages that there are living in the United States. So that being said, the other reason why I'm so upset about this is because we have zero chance. This guy here is the guy that's negotiating with Donald Trump. So it's basically this guy versus this guy. Trudeau is off in India doing dances, and I'm not even exaggerating. Our leader is actually dancing in India, wearing all this crazy stuff, insulting Indians. Even Indians think that Trudeau is insulting by doing all this. I mean, look at this guy. He's a numpty. So insulting to Indians. I mean, I could understand if he was actually complimenting Indians, but he's insulting Indians. It's the equivalent of the Indian Prime Minister showing up as, as a lumberjack. It's like the Indians, like the Indian Prime Minister showing up in wearing this outfit. Not exactly, but not too far off. Imagine if the Indian Prime Minister showed up to Canada in this outfit and drinking beer with maple syrup in one hand and a beaver in the other hand. It's insulting. So that's another reason why I'm upset. Trudeau is the guy, and wait, oh, I got to show you guys this because this is absolutely incredible. You guys think you have problems with your leader? Um, this is our leader. Yes, that is our leader. That is our leader of Canada. Wait, he fought this guy. They actually had a fight, right? This is not a joke. That's the leader of Canada, right there, making fun of this guy's belly. Maybe he's making fun of something lower. I don't know. God help me! Somebody, please! Put me out of my misery! This is crazy. This is absolute nuts. Anyways, I'm loving this because this is not going to end well for Canada. But also for the United States, it's not going to end well for you guys as well, too, because you guys are getting a great deal, and it's just this maniacal maniac trying to gain more power, and it's working because people believe, if you actually watch this Twitter feed, people actually believe that for some reason, don't ask me how, the United States is the richest nation in the world, Canada is far behind, and Mexico is way further behind. So how can the richest nation in the world be getting a bad deal when the other two nations that they have to deal with are sucking wind? Just think about it from common sense, right? You already have the good deal. That's why Canada is far poorer and Mexico is far poorer than the United States. It's crazy. But anyways, it's entertaining, having fun. Back to trading. Back to trading. Little rant there. This one's losing money. This one's making money. The trade's about break even right now. I'll come back. I'll stop the rant and we'll get back to actually making some money today. Okay? Okay, guys, a little update here. We see that the U.S. markets, the spider in particular, has taken off and it's actually positive on the day. But that's why we have our hedge, and our hedge is working out fine. Currently our trade is actually about break even still. I'm going to hold on to this. I think it's still going to work out just fine for us. I expect the NASDAQ to actually take off as well too, and I'm actually bullish on the market today, so we'll have to see how that plays out. Come back, and right now we're about break even still. Okay guys, a little update here. You can see that the SPY is flying, but guess what? So is our QQQ. Trade's still about break even right now. Now I'm not too happy with the long side. I don't know if we're going to make very much money on this trade, but we are not losing money. And I think we're just going to hang on to it, and I'll come back and do an update in a little bit. We are about break even right now. Small loss, not a lot. Okay, SPY just spiked quite a bit, and now the trade is in a losing position. We're down, not a lot, about 30 cents on the trade. I'm actually flirting right now with adding to the trade. Now, for those of you that just trade one directional, this is something that I would never ever recommend, is adding to a losing position. But it's different when you hedge trades, because whenever you're hedging assets that are very highly correlated, they don't stray too far from those correlations, right? They really don't stray that far from these correlations. So unlike traditional one-directional trading, you never want to average into those positions. But in this case, when you have an asset that doesn't go too far from its correlation, it's a lot safer. So that's exactly what we're going to do right now. I'm going to add to my short at 126.87, and I'm going to add to my long at 166.22. So we're going to do that. I'm just going to edit these properties right here. Okay, so now we are averaged in on this position. And again, this is the difference between correlation trading and straight up directional trading. You can average into these losses, and this is another reason why in the hedge fund this is how we do it, because we know that these correlations are not going to get too far away from each other, and that eventually one of the sides is going to catch up with the other side, and it's going to come back to a more mean revision. And that's, again, like I said, this is why large institutions always hedge trades, because it gives you far more flexibility in trade management when you have a hedge on. And you know, I can take one side off, I can leave one side on, and just so you're aware, we're not going to be taking the same amounts right now, okay? We're actually going to be using, we're going to get that calculator back up again, and we're going to recalculate with another $100,000 the correct amount. So our short is going to be 269.83, 269.83, and our long is going to be 166.25, 166.25. And so now we're going to bring our totals up. Okay, so let's watch that. And this is what we have right now, and we now have 200,000 of each side. Okay, I know for most of you watching right now, you might be going, oh my god, that's a terrible thing to add to a losing trade. And in normal circumstances you would be correct, but not when you're trading high correlated assets. Okay, come back, we'll see how she does. Okay, everybody, it's been a while since I've done an update. We are still in these two long NQ or QQQ trades and the short spider trade. Now, the nice thing again that I want to talk to you about is the ability to manage trades once you have more information. So that being said, I really like the strength of the spider today, and I like the strength of the market. What I'm actually going to do here is I'm actually going to close, because I like the strength of the market. I'm going to close my short trade and I'm going to leave my long trade open. Okay, so let's just do that right now. Hang on. Okay, so we're going to close this trade right here, or we're going to close both sides of this trade right here. So that's where we're getting out right there. Let me just change that property. We're going to come back and we're going to do the math and calculate everything later. So we are completely flat now with a loss on the SPY. However, we are still in our long QQQ trade. Now the entire trade right now is down. It's in a losing position. But again, the beauty of being able to put yourself into a hedged position is, and my students will understand this, as you get more information by the order flow, you can manage your trade far more effectively. Okay? So I'm going to pause the video here, and I'm going to come back when I decide to close the other side. My personal belief is that we're going to make one more push higher, probably up into the 168.26 area on the QQQ, and that's where I plan on closing the entire side. We'll come back, we'll see what happens. I'll pause the video right now. I'm really glad today actually turned out the way that it did, because it's allowing everybody to see exactly how superior when you trade correlated markets are, especially for my students that follow order flow, when you can manage the trade more effectively as you get more information. So we're going to pause it. My plan is for the QQQ to make one more push higher, at which point in time I'm going to close my long. Okay? Okay, so everything is not working out the way I planned today. You gotta love Mondays. However, I am not too worried just yet. I could have held on to cover my SPY at a little bit better a price, but I am still very bullish on this market right now today. So now I'm going to make another adjustment. What a fun day. I'm going to buy more QQQ. We'll give it that price. Going to buy more QQQ. So now I'm completely long QQQ. Now, with the condition where I'm now going to add in a stop. So my stop on the entire trade is now going to be down here. Okay? Let me just get that in there. That's my stop on the entire trade. I will exit my entire long position on the QQQ, and we'll lock in all the losses, or I'm going to hold on till we make a new high, which is what I hope we're going to do. We could do before the end of the day. So I now have a full position on the QQQ of 3 additions, and again, I'm going to add another $100,000 of the Q at 167.28. Now, just so you guys know, I've actually done these trades in my platform prior to telling you about them. So my prices are going to be a little bit different. Obviously, there's a delay factor here, and so this is just paper trading that I'm showing you right here, even though the live trades are taken in my platform before I take them. But so they're not going to be exactly accurate to the full results that I'm going to get from what I'm showing you, but they're going to be highly reliable. Okay, so my plan right now is I now only have the 3 long positions of $300,000 worth of QQQ at these price levels, and we're going to just play it out. I'm going to take the whole thing off if we get up to these highs, which it's now 2:30 in the afternoon. So I'm actually loving this video because I've made every single adjustment that you could possibly make, from averaging in to adding to taking half the trade off, or the workable trade off, and then adding in again to the other side of the workable trade. Okay, so that's the full position we have on right now. Long all these 3. This loss has been locked in. So in order for us to make money right now, I'm really going to need, well, I still could make money, but I would make quite a bit of money if we can push up to 168 again, and that exactly is my plan. My plan is to do exactly that. So I'm going to pause the video. It's almost been 30 minutes now. We'll come back. We'll see how it plays out. But I'm actually really glad that it's kind of working out the way that it's working, because you're getting to see all the adjustments that you would make in one day, which is kind of really rare. You're seeing all the adjustments that you can make when you trade correlations. Okay, so we'll come back, pause the video, see what happens. 2:30 now, probably not till the trade is closed. Bye for now. Hang on, don't go anywhere. I'll be back when I finish off the trade. Okay, so as you can see here, we've bounced off of this level, and we're at a level that I'm a little bit concerned about right now. I'm really not sure. I'm just going to watch this level very, very carefully. We really kind of bumped up into it pretty quickly, and I think we're going to be okay. I'm not 100% certain though, and I may just decide to take off some of the trade right now, because right now we are in profit. We added almost another 50 cents with our addition to our full lot. So it's 20 to 3 right now. And I think there's probably enough time to hold on to this trade for a push higher. And I think what I'm going to do is I think I'm going to adjust my stop to this level here, so that in a worst case scenario, I at least with the additional, I don't want to be caught upside down with the additional $100,000 that I bought here. Okay, and that's what I'm going to do. And it's a long video. I know it's 31 minutes, but I really hope you guys listen to the whole thing, because there's a lot of really good information in here in terms of adjusting positions. I don't know if today is going to be profitable. I have no clue right now. Right now I know I am in profit, but I'm not sure if we're going to end up profitable by the end of the day. I hope we do, because that'd be pretty excellent. And started off to be everything that could have gone wrong today went wrong. So if we end up making money with every type of adjustment that we can make in these situations, it'll be pretty wicked. And so just to be clear, the 100,000 that I added on here, I'm moving my stop to break even on that, but I'm leaving the rest. Actually, you know what? Screw it. I'm going to just move it all to break even, everything to break even, which would probably be around, well, I'll be in a loss, but I'm going to move everything to 167. I'm going to move it to this level, 167.10. And give it a little bit of breathing room here. Structurally, I like this liquidity level here. And this trade looks like it's going to actually be beautiful. So hang in there. I know it's a long video, but this is worth it, because like I said, there's a lot of on-the-go adjustments here that we're making that you can take away a lot from. I really don't like that rejection at that level. I wish it was 3:45 right now. I'd feel a lot better about the trade pushing up into the close. But it's 2:45 right now. If it was 3:45, I'm pretty confident we would smash through that level in the last 15 minutes. There is liquidity sitting there, and I do believe we are going to hunt that. So I'm going to put it on pause again, because I don't want this to go an hour, but it's a really excellent video, so I hope you guys enjoy it in terms of adjustments. I want you guys to notice something. You'll see the spider is up at a new high, but the QQQ has yet to make that new high. So what I'm actually going to do, guys, my plan was for the QQQ to catch up, and it didn't. So I'm actually taking the entire trade off right now. Okay. And we're going to just calculate it right here. Okay. The trade is emptied. All right, trade done. Now let's go back. Let's check the math. 1 second, guys. Let's go and check the math and see how the trade worked out. Now again, this is it's quote unquote a demo trade because the actual trade was taken, but the fills are completely different and the amounts are completely different, but the proportions are exactly the same. So I don't want you guys to think, oh, Steve's just demo trading. No, I'm trading this, but my fills were a little bit different and my averages are a little bit different and my sizes were a little bit different. So let's just go back and figure everything out. Let's do some math, shall we? Okay, so let's get a calculator out. I know how much I made in my account, but let's see how much we make here. Let's do the loss first. So 100,000 shares at 268.24. Let's get the spreadsheet out and let's do this again. I just want this to be as realistic as possible. So 268.23. 268.23, and that was 337 shares. Okay, so 373 shares. I'm dyslexic, in case you guys, if I do things, please forgive me. Don't take it too seriously. So we had 337 shares. Okay, and we made on the first, we lost on the first 337 shares, 271.72. Okay, so let's remember that. I'm going to actually write this down. So we had 373 shares, and we lost the difference between 271.72 minus 268.23. Let's do that. So we have 271.72, and I'm doing this the long way, guys. I could simplify this and do averages, but I just want to keep it simple so those of you that have never seen pairs trading before can understand it. So the difference is, subtract 268.23. We lost $3.49 on that, times 373 shares. Wow, big loss there, wasn't that? It was $1,000 and 1,031.77. Okay, so that's our first loss. Now remember, we added here at 269.87. Okay, so let's do that. 269.87. 371. Okay, so just a few shares less, not a lot, but we're going to keep it accurate. 371. Okay, and our entry was, it's going to be 271.72. 271.72, right? 271.72, subtract our entry price, which was 269.87. Okay, subtract 269.87 equals $1.85 times 371 shares equals a loss of 686.35. Okay, so we had that loss plus our one, oh, our 1301.77. So a net loss of $1,988.27 on the loss side. Okay? Now let's go and let's do the winning trade, shall we? All right. So we'll start off again. We got long the QQQ at 165.07. 165.07, which was 606 shares. Okay? 606. Okay? And then on that trade, we just exited right here at 167.84. 167.84. Okay. 167.84, and bear with me guys, I know I'm recording all this, I could do the numbers on my own, but I want you guys who have never seen this done before, I want you to experience the exact process, so I'm showing you the long form. So 167.84 subtract our entry, which was 165.07, equals a profit of 277, right? Of 277. Sorry guys. Forgive me, 165.07 equals a profit of 277, right? Times 606 shares. So on the first part, we had a profit of 1,678.62. Okay, that's a profit. But we have 3 positions. So let's continue here. We got long here at 166.21. Right, 166.21. So 602 shares, okay. We added to our trade 602. So we have 602 shares. We got out at the same price, 167.84. We got in at 166.21, okay. Right here, 166.21, we got in, that's where we got out. So that leaves 167.84 subtract 166.21, $1.63 times 602 shares. $981.25. More profit. Okay? But we had a third position that we added right here at 166.28. So we have, let's go back to our calculator. It's going to be about the same, but I want to be accurate. 166.28. So 601, right? Was that right? 167.28, forgive me. 167.28. So a bit less, okay? 598 shares, okay? All right, 598, and we got out at 167.84. Subtract our entry, which was 167.2856 times 598 shares equals $334.88. Okay, so let's add them all up. So we've got 334.88, that's a win. Plus we have $981.25. Plus we have $1,678.62. $2,994. That's our total winning. Subtract 1,988.27 for a net profit of $1,006.48 approximately. And here goes that market off to the races. I do think we're going to take out that high still, but there's a lot of stuff going on today, and I'm really glad. This video is 46 minutes long, but I really hope you watch the whole video, because this is the reason why when you manage a lot of money or you manage a hedge fund, you always want, and the reason why they call it a hedge fund, the reason why professional traders, especially when you have very large accounts, the reason why you want to take two sides and never be completely exposed on one side is because you have the flexibility to add or subtract from your trade. If I would have just left my original position on right now, this trade would have been a loser. But because, and my students will understand that, and if you don't understand how to read the market effectively, you need to take my course. But when you get the right order flow and you get situations where you can read the order flow of the larger institutional traders, and that's what I teach. I teach you how to look at how price is moving very specifically in a quantitative way. This is why hedge funds hedge, folks, because my original thesis on the trade turned out to be wrong. Okay, and I really want you to pay attention right now. It's really super important. The QQQ was weaker than the spider this morning. And my thesis when I put the original trade on was for the QQQ to catch up to the spider. Okay, that was my original plan. And that was the original trade. When I put this short on and this long on here, it was just supposed to be a binary trade, meaning that it was a hedge, but I was just going to scalp the difference between the QQQ catching up to the spider, because the QQQ was weaker than the spider. But as the action unfolded, as I could see how the order flow was unfolding, and with my skill as a professional floor trader and my entire background and everything that I teach my students, I saw that it wasn't unfolding. But I still, when I added onto this position right here, where I added a short here and I added a long here, it still seemed to me like it would be possible that my original thesis that the QQQ would gain strength and catch up to the spider was correct. But as time unfolded, I was dead wrong 2 times. Okay? As time unfolded, as the order flow unfolded, I saw, you know what, I'm completely wrong in this situation. The QQQ is not going to catch the spider today, and it was clear to me that wasn't going to happen. So I took off what looked like a good trade and changed my entire bias. Because the market was so strong, instead of being a catch-up trade, it turned into a strength trade, And I was even wrong on my entry on the additional trade that I added here, but it still worked out beautifully for me. I could have actually, if I would have been a bit more patient and waited for this liquidity 167.11, and if I would have been a bit more patient and held for these highs here, instead of a $1,000 day, I'd be looking at a $1,300 or $1,400 day. So even though today was a complete, excuse my language, if you got sensitive ears, don't listen, a complete clusterfuck of me being wrong in a lot of my presumptions or predictions, if you will, as to what was going to happen, because I was hedged, I was able to turn what should have been a losing day, for the most part, into a profitable day. And that is why when you manage large sums of money, and particularly when you manage people's money, you always want to be hedged. Now, some people might say to me, Steve, well, you would have made so much more money if you didn't pay that $1,900. Remember, the net profit was much higher, but because the net profit was $2,000 more, I could have made $3,000 on the day just by getting the direction right, which is great. I knew the market, I knew I wanted to be long, but the asset that I thought was going to be the strongest one turned out to be the weaker one. So in exchange for all that extra profit, I am more than happy to have the flexibility to adjust my trades as my thesis or prediction either turns out to be true, or in this case, I was wrong not once, twice, but I was wrong 3 times. 3 times I was wrong. Out of 4, I got the right direction right, but I was still able to turn a $1,006.48 profit. Okay? Now again, my fills were slightly different than this in my actual trading, but I did trade this today. Don't want you to think this is a paper trading. I did trade this today inside my account, but it was slightly different and with different amounts. I just rounding things up here because when I trade, I don't use round numbers. I'm not going to do exactly $100,000 worth. I might do like $870 worth, or $850 worth, and $830 worth. But I wanted to keep it nice and round for you guys so that you could see from start to finish the advantages of hedging. This is a long video, but it's well worth it, okay? Because you can see how you can be wrong when you hedge highly correlated assets well, and you can still be completely wrong 3 out of 4 ideas and still come out with good money. Okay? Hope you guys enjoyed that. Thank you. And remember, I'm the only educator that does this stuff in real time. I didn't actually post this trade in StockTwits because I was already too busy making this video and kind of updating it here. But you saw it in real time. And again, go back and see. This is not me doing a replayer. This is not me in any way hiding anything from you guys, other than the exact amounts aren't exactly the same as I took on my real account. And for security reasons, I'm not going to show you that. But it is a live trade. Hope you guys enjoyed that. Thank you. Leave your feedback. Let me know what you think of this type of trading. I'm actually flirting with the idea of completely changing my website offer and not doing education anymore, and only doing either a live trade room or live trade calls, because I really don't want to compete with guys out there that are selling courses for $500. My course is worth $10,000. I do not want to discount my course any more than I already have. But I'm also not selling very many courses right now. And the reason is because there's just too much cheap stuff out there, and people really don't know the difference. It's, like if you're, 1, 2, 3, 4 years into trading, you don't know the difference between a high quality educator and a low quality educator. So, if given the choice between me and somebody else that's got a flashy website that's asking you for $500 and me that's asking you for $3,000, who are you going to take? You're going to take the flashy guy because you really don't know the difference, right? And I'm not a website designer. I'm not a professional educator. I'm a professional trader, right? My money comes from trading, not from educating. That's just a side income for me. Anyways, I don't want to go off on a rant. Let me know what you guys think about this. Thank you for watching. And wow, this trade could have worked out really, really, really well for us. Hope you guys enjoyed it. And bye for now.